Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday, the 28th of February in London. I'm Caroline Hepker. Coming up today, stocks fall as President Trump sticks to his tariff timeline and adds plans for additional levies on China. Keir Starmer shares warm words with Donald Trump as the two men float a possible UK-US trade deal. Plus, chocolate's bitter aftertaste, why record-high cocoa prices are pushing Europe's historic confectioners to the brink. Let's start with a roundup of our top stories. Global stocks have sold off and the dollar strengthened after President Trump doubled down on his commitment to implement broad tariffs next Tuesday. The US leader says 25% tariffs on Canada and Mexico will come into effect on the 4th of March, while Chinese imports will face a further 10% levy from the same day. The S&P 500 tumbled on the news and is now down on the year, underperforming benchmarks in Europe. The US equities benchmark has lost 2.5% this week and 3% for this month. It's just another 1.4% decline away from being wiped out of all the gains since President Trump's election. Alessio De Longis of Investco Solutions says that recent events have given the markets a reality check on previous bullish sentiment.
What is happening is that relative to expectations, relative to what markets had baked in up until a couple of months ago, there is a realization now that the narrative is changing.
Alessio De Longis speaking there as US Treasury yields edged lower, with the 10-year dropping to around 4.23, a level not seen since December. President Donald Trump and his announcement of an additional 10% tariffs on Chinese imports came as a surprise to investors and also officials in Beijing. The new levies come on top of a previous 10% duty implemented earlier this month. China responded to those tariffs with targeted steps, but at the time signalled room for more forceful countermeasures if needed. Here's Bloomberg's Min Lo.
Bloomberg Economics had crunched the numbers. They said that the original 10% tariffs might still be manageable for China, but the additional 10%, that would be equivalent to about double the scale of the first trade war. It could cut China's exports to the US by about 50%. And of course, the most immediate reaction we have seen in markets is a slide in the yuan.
Bloomberg's Min Lo says that the new tariffs will come into force just one day before President Xi Jinping heads into the party's biggest political meeting of this year, where his lieutenants will unveil their blueprint for the economy in 2025. UK Prime Minister Keir Starmer left his meeting with Donald Trump with promises of a trade deal. The US president said that he would restart trade talks between the two countries and heaped praise on Starmer. Trump was asked if the British leader had convinced him not to impose tariffs.
He tried. He was working hard, I'll tell you that. He earned whatever the hell they pay him over there. But he tried. I think there's a very good chance that in the case of these two great friendly countries, I think we could very well end up with a real trade deal where the tariffs wouldn't be necessary.
President Trump had promised the UK a trade deal in his first term, but got bogged down in negotiations. The meeting, though, is being seen as a diplomatic coup for the British leader, despite his failure to secure American security guarantees for Ukraine. Keir Starmer told reporters that he pushed for Ukraine to be part of any peace discussions.
We've discussed a plan today to reach a peace that is tough and fair, that Ukraine will help shape, that's backed by strength, to stop Putin coming back for more. I'm working closely with other European leaders on this. Mr. President, in this new era, you're also right that Europe must step up. And let me tell you now, I see the growing threats we face, and so the UK is all in.
Despite Starmer's promise, Trump avoided saying that he would provide US support for a peacekeeping force, calling the idea premature. Ukraine and its allies in Europe see the promise of US military involvement as critical to prevent Russia from invading again in the future. Trump instead focused on a deal on critical mineral sharing expected to be approved later today and walked back criticism of Ukraine's leader Volodymyr Zelensky. The Ukrainian president is headed to Washington today to sign the agreement and to try to convince the US to provide security guarantees as part of any peace deal with Russia. In the Oval Office, Donald Trump was asked by a reporter if he still thinks Zelensky is a dictator.
Still think that Mr. Zelensky is a dictator?
Did I say that? I can't believe I said that. Next question.
The US president made the allegation in a social media post accusing him of not holding elections while his country is at war with Russia. A White House national security official tells the New York Times that the deal doesn't include any guarantee of future war funding, a difference that is expected to be at the center of the meeting between the US and Ukrainian leaders. Bitcoin's value has dropped more than 25% from its all-time high, which was set 6 weeks ago. The sell-off underscores a swift change of fortunes for the digital asset. Bitcoin hit its all-time high of more than $109,000 in January as the US president drove bullish sentiment with talk of wanting to make America, quote, the crypto capital of the planet. However, worries about the president's combative stance and broader concerns about the US economy have since driven a rapid reversal. The token is currently priced at around $80,000. Those are some of your top stories this morning. In terms of the markets then, a lot happened yesterday. We saw US equities sinking at the close. The S&P 500 fell 1.6%. The Nasdaq dropped 2.8%. Nvidia stock plummeting over 8%. This as the US dollar rose as President Trump ratcheted up those tariff threats to China and to Europe. In terms of what's been moving this morning, stock futures sinking for the Eurostoxx 50 futures down 1% after we saw a 1% decline for the European indices yesterday. And Asian equities and currencies rattled this morning. The MSCI Asia Pacific Index is down a significant 2.1% right now. The Japanese yen trades weaker, a tenth of 1%, 149.93. The CSI 300 Index is also down 1.5%. US stock futures, though, are in the green, and Bitcoin now down 25% from its all-time high, actually has crossed below $80,000. So those are the markets. Now, in a moment, we are going to be talking about the warm words that were exchanged between President Trump and Prime Minister Starmer, and also the impact of high cocoa prices, a story that we've been following for you for many months, but I want to bring you the latest details. Before that, though, something that caught my eye this morning on the Bloomberg terminal, Alva Ray has been writing about this. The kind of artery at the heart of London. This is Oxford Street, of course. London Mayor Sadiq Khan has begun a consultation on a plan to pedestrianise Oxford Street. Apparently it's the busiest shopping street in the whole of Europe. It's not the first time that the London Mayor has tried to pedestrianise and ban traffic from Oxford Street. It's thought to be between Marble Arch and Oxford Circus. So this time, of course, he's got the support of the Labour government. So there is a consultation. And now it's going to run until the 2nd of May. I think this is going to get so much attention in London. Traffic issues always do. And, you know, residents in the past have been against banning traffic. Maybe it would clog the streets around it. Others say it would be fantastic, revitalise Oxford Street. So one of the stories that had my attention. Well, there's another major issue for Britain, though, waking up this morning. Prime Minister Keir Starmer managed a diplomatic coup, charming President Trump with a personal invitation from King Charles for a second state visit. But he didn't obtain America's security backstop or guarantee to protect Ukraine. Joining us now to discuss this, Bloomberg's EMEA News Director, Rosalind Matheson. Good morning, Ros. The stakes could not have been higher, could they, for the Prime Minister yesterday? But he seemed to manage to win the favour of Trump and perhaps even avoid trade tariffs for Britain?
Well, that's right. If this meeting probably went as good as he could have imagined it was going to go, in that, yes, he dodged Trump's ire again on tariffs, although he is helped by the trade picture between the UK and the US. Perhaps the one upside from Brexit is that the UK is in a less obvious trade position with the US to draw Trump's ire. But yes, he did manage to pull this meeting off, and it's interesting because they're not necessarily a natural pair, are they? They're not two who you'd see who would automatically have a good rapport, but they do seem to have hit it off. And certainly the invitation to come to the UK for a visit and to meet with the King was a masterstroke, because Trump obviously is a big fan of the royal family. We know that for sure. And so certainly that was an appeal. And, you know, the one thing he didn't manage to get, though, in all of that was what he wanted on Ukraine.
Yes.
And that was a deliberate message that the US would be willing to provide that security backstop on Ukraine in the event of a ceasefire. It's just very clear that what Donald Trump wants is Europe to be solely responsible for Ukraine's security, in the military sense at least, in the event of a ceasefire.
Even though the language was watered down, wasn't it, from, a guarantee to just a backstop was the request, which sort of leads to questions about the offer of putting troops after a peace deal in Ukraine. UK and France has done the same, offering troops. Really is quite, therefore, even more significant. Do you think that it creates more of a wedge between the UK and Europe? I mean, President Trump said he got along famously with Keir Starmer, and that he thought that Brexit would work out. So does that create a divide?
Well, in a way, it's interesting because it seems as though Trump is listening to perhaps two people right now in Europe when it comes to Ukraine, and that's the French president and the British Prime Minister. And obviously, we don't really have a government at the moment, aside from a caretaker one in Germany. But, Europe is really saying we need to speak with one voice here, and we need to be talking together as a collective, including the UK, even though it's no longer in the EU. And we need to be putting forward our plans with one voice to Donald Trump. And if Keir Starmer is taking the lead on that, alongside the French president, where does it leave the rest of the leaders of Europe? The leaders of Eastern Europe, for example, perhaps Giorgia Meloni in Italy, and perhaps some concern coming in that the person who's got Donald Trump's ear on this is Keir Starmer. I mean, obviously, Keir Starmer is a fierce advocate for Ukraine and for supporting Ukraine, and the UK has been one of the countries that has said very publicly they'll be willing to put troops on the ground in Ukraine in the event of a ceasefire. Again, is that actually going to be feasible, though? Given the domestic political mood in the UK, that's not something that Starmer has completely road-tested in getting that over the line with the British people, and whatever approvals will be needed to do so. But it does seem as though really Donald Trump is looking to Keir Starmer for guidance on that. And again, the French president, perhaps less so the rest of the leaders of Europe.
Yeah, indeed. Okay, let's see how that develops. Of course, ahead of a major European leaders meeting that is taking place next week. Thank you so much, Ros, for being with us. That is Bloomberg's EMEA News Director, Rosalind Matheson. Now to another story, the $50 billion chocolate market. Europe imports about half of global cocoa beans, most of it from West Africa. But harsh weather and crop diseases have hit harvests hard. They've driven cocoa prices to record highs, forcing chocolatiers out of business. Joining us now is Bloomberg's soft commodities reporter, Mumbi Gittau. Good morning, Mumbi. You were in the radio studio last year, about March, April last year, talking to us about the surging cocoa prices. They nearly tripled over the course of 2024. You warned that it would have an impact. What have you found?
I think it was only a matter of time before the pin drops. In the first half of the year, the cocoa market was very hot, and the physical side, which is now the retail and the consumer side, was trying to adapt to the high prices. And so in the second half, that's when we started to see now the physical side heat up, and companies were now contending with really record high prices. In April, prices reached a record of about 12,000 tons, $12,000 a ton, and then in December, it nearly hit $13,000 $2,000 a ton. So that's been very high prices for some of the chocolate companies who are used to $2,500 a ton. That was nearly tripling of prices. So what we found is that companies have started to fold. Companies are really feeling the pressure of the record prices. And it's now a balance of, do we raise prices? And if we raise prices too much, we're going to lose consumers, we're going to lose our clients. And we talked to a couple of chocolatiers who said it's a really tight rope. You increase too much, consumption goes down. You don't increase, then you risk folding your company and going home. And for some of these companies, they're really brand companies. They've existed for such long years. They've existed before the World War I, World War II. And if they could survive that, they feel maybe we should survive even this cocoa crisis.
Okay, wow, cocoa crisis. Well, then in terms of alternative production or sources, you have reported too on demand for beans from South America.
Yeah, so Ecuador, Colombia, Peru are countries that are coming up in terms of production, but it really takes time before they ramp up production. And even though they can provide that alternative source for cocoa, West Africa still remains the dominant player. It accounts for nearly half of global production, so it really is a tight place for them to be.
Just very briefly, are the weather conditions and the harvests improving this year in West Africa?
They did improve, and that's why we are seeing a rebound in production, but that's not enough to get us out of the deficit from the last season.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.